brief for practice round 2. For this video, I'm going to go through the result for this practice round with you, and I'm going to point out the things you need to pay attention. So before we start, please know that this is only the practice round, and it doesn't go to your grade. So the actual grading starting from a competition round. The purpose of the practice round is for you to learn and get to know the CAPSIM and learn how to make decisions. So the practice round will reset to 0, as I mentioned before. You also need to know the official practice round will open on February 3rd. So get together with your teams and go through go through the CAPSIM with your team and to make the decisions for competition round 1. Okay, so as I highlighted here, for a couple teams ratio here, the ROS, ROA, ROE. So Team Baldwin, Chester, Ferris, Garrett, and Hopper. Those teams, the 3 ratios are negative. So ROA, ROS, ROA, ROE means what? Return on sales, return on asset, return on equity, right? So those are the indicators of how profitable a company is related to the total sales, total asset, and total equity. So if you have negative number, you need to take a look of your how you utilize the capitals to generate money for your company, right? So the lower or even negative ROA, ROS, or ROE that suggests that the company that did not use the assets, equity, and sales effectively to generate income, right? So those teams need to pay attention here. Next, I want to point out is the profit. So if you have it's kind of related, right? So if you have negative, the ratio you did not utilize fully about all your assets, then you get a negative profit here. Probably other reasons too, but mostly you need to know how to make decisions and make a good projection. So we can see here SG&A ratio. So SG&A is selling, general, and administrative expenses. So those are the cost of running a business. So they include rent, utility, marketing expenditures, or employee benefits. So generally speaking, the lower of SG&A to sales ratio, the better. So okay, so we can also see the contribution margin. Those teams, Digby, Ari, Ferris, Garrett, your contribution margin is lower than 30%, looks like. So contribution margin represent what? The incremental money generated for each product sold after deducting the variable portion of the firm's costs. So the higher ratio, the money is available to cover the business overhead expense or fixed cost. So if your contribution margin is lower than 30%, then problem can be traced to some combination of maybe your marketing. If did you sell the product that the customer like or hate? Or did you have the production that your labor or material cost is too high, right? Or the pricing, or you cut your price too much? Then those are the areas you need to take a look into when your contribution margin is below 30%. So looks like your most of the teams did a good job that did not run into emergency loan, and Team Hopper just like a little bit, so it's not too much. It's not really major issue as long as you can make profit and make cash and pay it off next round. That shouldn't be a big problem for just a small amount. Okay, so here just want to let you guys know that emergency loan that the situation can happen during the competition round. So why do some of the team go into get into emergency loan? Then most likely is your inventory, right? If you expect to sell the inventory, you expect to sell wind up in the warehouse, right? Then um, then you order, then you sign a check to pay for the inventory, then you run out of cash. So about 70% of the emergency loans fall into this category, right? So it's very important to have a good projection and make sure the product you produce, you sell them, then it can prevent the happen. And also sometimes it's maybe because you found a major planned improvement, you forgot to fund it, then 25% of the emergency loans goes there, right? Usually. Or it can be your profit is so negative that you exceed your cash reserve, then probably about 5% of emergency loans falls into this category. So you need to pay attention to those things. So, but you may ask, how to get off the emergency loan. Then first you need to check your inventory. Do you have excessive inventory? Or try to determine why. Or if there's a sales forecast is too high, or it's a matter of having a poor product. So you need to check out. Also, you can check the cash flow statement for the investing activities or plant improvement. Those are the areas you need to look into. Okay, so now let's come to the okay, so this is the market share. You can see here's a huge chunk of pie that everybody is trying to get piece of pie, right? So Team Ari have the highest market share. Okay, so here I want to point out the Team Andrew and Digby are the only two teams that is making profit. So what's the foundation of business? What is the purpose? Is to make profit, right? So for the other teams, you may check into like the price, or did you have a good projection. So make sure to making the profit is also one of the important element or criterias of the gradings for CAPSIM. Okay, so here comes the stock and bond. Stock price is usually influenced by many factors, mostly like your profit, if the company is profitable. So stock price is you can see here the book value. So book value reflect the current invested capital, and the EPS that indicates your future earning potential, and dividend is the money that you pay for your stockholder. Here we see two teams pay dividend. Just one suggestion: if your team is not making like a good profit, it's usually not recommend, because it will influence your cash flow statement, because those are the cash you are going out, right? Then it will influence the whole business. But if your team is making profit and everything is good standing, then paying dividend will help you to improve the stock price in the future. So it's just a general tips for you. It doesn't mean you cannot pay dividend, but you can once you are really highly profitable. Okay, so you can see some of the teams stock price is like 1. If this happens, that usually means you have if we come here, that means you have the negative net income, a lot of negative income basically. So then it will influence what your stock price. So team Ferris is right here. So make sure that you're making profit and generate cash. Then hopefully the stock price will go up. Okay, so as mentioned here, so team Ferris, your net income is too low, then it influences your stock price. Next, we have the depreciation. So depreciation is that you invest in your the plant, buildings, equipment. Those things depreciate, right? Each round. So just make sure that you fully utilize your capacity that you purchase to make profit, because each year everything depreciated that cost a lot of money. Then we have the inventory. Some of the team have excessive inventory, then that's negative cash flow, right? Because you have to pay money to store the excessive inventory. So good projection is very, very important in this caption. Dividend paid, as I mentioned before, if you're paying dividend, you see it's influenced on your cash flow statement. That means you have less cash on your hand if you are not really profitable, right? Even just you're paying $1 per share, you're paying 2,000 million, like $2 billion out, right? It's a million, right? So think about that. It's a huge cost. Okay, so in the income statement, you can also see your team and other teams' interest, basically how much interest you have to pay. In this caption, you can get a long-term debt, right? Long-term debt, and then the interest, that's how much interest you pay each year. Product analysis. Here I just want to point out that some of the team did not really fully utilize your capacity that you purchase. Then what does it mean? It means that you it depreciate, right? Your land and equipment, everything depreciate each round. So it's really wasting a lot of resources that you paid for. For example, team borrowing here, and also team Ferris. So just get to know what's happened here. Did you really produce a lot to meet that? At the same time, you can also see some other team is having more production than the capacity. Then that means this team is adding the second shift for the production. Then that's usually it'll be much higher than the capacity you purchased here. On this page, I want to point out a couple of things. One is inventory. You can see how much product left for each, is in your inventory or you stock out. So we can see team Baldwin, team Ferris, and the majority of the product in team Andrew are stock out or sold out. That's good sign. That's very good projection. However, leaving zero is necessarily good. Maybe yes and no. Yes is that you don't have to pay the inventory cost. No is that other teams will get the opportunities from you, right? For example, you potentially can sell this much. However, you don't run out of the product, then other team sell their product to make profit, to make money. Basically, they will take away your market share. So that's why for example, if you have a 7, lower, I have 1, 2, 3, left there even is much better than just 0, right? That means you have very small, very little. That means you take the whole market share. But it's usually very difficult to do. It takes a lot of luck as well. It's also depends on other teams. It's a whole competition here. So make sure that trying your best to get a good projection is what you can do, right? And then this chart, I would say, is very important chart because you can see other teams, what they are doing, what are the informations for certain product in the same market segment. Are they directly competing with you? Then those are the things you can take a look. What are your competitors are doing, right? And we can also see here the second shift over time. Some of the team adding that, some of the team not. That is okay. It's just totally depend on you. If you add in the second shift, please keep in mind that second shift labor costs are 50% higher. So you need to make sure that to calculate that inside so that you don't run out of the cash. And then we have the automation here. So automation is basically range from 1 to 0, 1 to 0, and each level you increase is a $4 per point of automation. It's very expensive to increase automation, so you need to make sure what are the products you want to have a high automation. Usually, product like traditional or low end need a higher automation than the like high end size or performance because you need to sell a lot of product. You need to have higher automation to make this much product to meet the market demand, right? So plant utilization. So ideally is if you hit 140 to 180% that you really get the good score on the plant utilization. However, make sure that if you hit that plant utilization, you'll be able to sell that much product you produce. For example, Team Chester, you have pretty good plant utilization, about like 100, 140, 130. However, look, okay, look here. So you have some of the inventories left here. See, you want to make sure you have a high number. However, you can sell everything. That's the best case scenario. Okay. Now we come to the traditional market segment. I'm going to just go through one, and then you can see it's the same method to analyze other market segment as well. So from here you can see team of a lot of teams. Okay, so Team Ferries, actually they can sell much, but potentially they sell more. Then there could be that they take advantage from other teams that they cannot sell product. Then they potentially oh no, it's actually that potentially they could sell much, but actually they sell much. That means maybe their product is not really ideal the customer is looking for, so that they have lower sales for this So for the teams like that, you need to check your customer satisfaction, awareness, and accessibility, right? However, we can also see that, for example, Team Hopper, they potentially can sell this much, but actually they sell more than they potentially can sell. Then that means their product, take away from other teams' customers. So again, this potential perception map is very important. You need to hit the ideal spot so that you can sell, make the best sale. Okay, so then the customer buying criteria becomes very, very important. You need to see that, for example, the traditional in the traditional market, the 47% importance, that means what? The customers cares about age a lot. Then, and also the price also important for this group. So when you make your projection, then age, performance, size, make sure you hit that ideal spot, you make the best sales. Also for some of the team may ask, how do you forecast the numbers for the product you want to sell? You can see that next year the demand growth rate is 9.2. Then what you need to do is use this number times 1.92, come up with the total number, and then use that total number times the percentage of the market share in this particular market. then you can find out how much your team is going to produce. That is just under ideal circumstance your team can sell, but at the same time, you need to improve customer accessibility, awareness, and customer satisfaction, right, to make the best sale. You can also see the sales budget, promotion budget, what is the best price, right? You need to discuss with your team. So again, you see like a low end demand growth rate increased 11%, and then price is the most important for this market, right? So you need to also make sure that you set a good price. At the same time, you are making profit, right? You don't want to give your product for free, then your company will go bankrupt, right? Okay, so on and so forth, just analyze each segment analysis, and then you can see high end is going like 16% higher, very higher than other market segment. What is important, positioning and age, plays a huge role here. So you need to pay attention to that. And also for the high end, some of the teams are here there. Make sure you hit the ideal spot, and then you will be able to sell good amount, good, probably hopefully stock out your have good sales. Okay, so I analyzed one market segment and hope you can use the same methods to analyze other product as well. Then lastly, I'm going to go through. Okay, so before that, we take a look of this perceptual map. It's moving from left corner to the right corner. Why? Because customers always want to have lower price but higher quality of the product, right? So that's why the whole thing is moving to the right corner. Then you can see some of the team let's say Team Abby in this market segment really hit the ideal spot, but other teams is off the place. You can see if your team is on the ideal spot, then you can sell the most if you hit that. That's what the customer really expected the product. Okay, so lastly, what I'm going to point out is that for the human resource, it's started from round 2, and the TQM start from round 4. So pay attention to those little details, and turnover rate, and make sure you have pretty low turnover rate. Seems like Team Hopper turnover rate is the highest. Then we can see it's associated with that is the manufacturer, sales compensation, if you give trainings or recruitment, did you really invest in that? That's very important, right? So, these are the human resource module that you just want to keep your employee happy, right? So that they can keep higher production for you. Okay, so this is the debriefing for industry 2.